Welcome back. Well, let's quickly do a snapshot or get a snapshot on the commodity market action as well. We have Manisha joining in with the latest. Manisha, so what are the big headlines today?
Well, I'm looking at the iron ore prices right now, Surbhi, because we haven't spoken about this one in a very long time. And it has been gradually increasing in sense of prices. So much so that when you look at the US iron ore prices, we're trading at almost $100 a ton here. But here as well, as you can see, as has been the case with various commodities, there is a big disparity versus US and the rest of the world. So when you look at the iron ore prices in China, we've seen them gain up by 5.5% in the last 1 week, vis-a-vis 2% of gains in US. And when you look at the last 1 month itself, you can see that gap really strong. 3% of gains in the US market, while 13% of a jump is what iron ore prices have done in last 1 month in the Chinese markets there. Well, one of the reasons, of course, has been the US dollar index, and Treasury yields retreating from recent highs has been supportive for many of these commodities. The second point is about the stronger US and China economic data that we've seen in the last 1 week or so, most of it beating expectations, especially for the Chinese market, and that clearly has been supportive. Easing US and China trade tensions also has led to some boost in many of the industrial commodities, including iron ore. And then you have the China Politburo meeting happening in the end of this month. That would set course for the rest of the year in sense of policies, measures, and the street does anticipate that you could be listening to something in sense of infrastructure, property, and support to steel industry as well. And that is where iron ore prices come into picture. Also, when you look at the overall demand-supply fundamentals, we have seen a decline in inventories on port, especially in China, and there is improved margin on the steel mills supporting prices. The Chinese also have pledged to tackle issues when it comes to property, competition, and outdated capacity. The markets also will be watching out for optimism over potential Chinese stimulus. That is something that has been keeping many of these industrial commodities in favor there. Remember, China is important because it produces 55% of global steel, and Australia is equally important because 60% of all seaborne iron ore comes in from Australia. So keep an eye on both of these.
All right, Manisha, thanks very much. Iron ore in